Good morning, everybody. Welcome to the Morning Vol Report. As Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to the Morning Volatility Report. Again, one of Mark's favorite signals, and I think it's a pretty good one. You have stocks that are trying to fight for new highs, right? Again, probably a lot of squeeze action in some things, but the volatility kind of makes a new high. He's always seen that as bearish, and usually it's a very good signal. So keep an eye out for that type of signal. Today we have kind of a little bit more vanilla, market down, vol up, VIX back to 18. At OptionPot, we have been kind of unwinding a lot of like the longer delta type trades. Even if we have long gamma, it's now starting to flip into some of the negative. Some of the deltas are becoming a little more negative. So again, what do we have? We have China slows down. It's putting a short-term crimp in our commodity rally. So you can see just a good thing to watch lately is just XME. Right? Down on the day today, volatility is up. They're starting to put the volatility in these products now. I would say a week or two ago, it was inexpensive. Now it is getting a little bit more fairly priced. You see the little uptick in vol here. We're starting to get volatility match some of the moves. If you were in early, although we still got a little room in this group, you might want to start taking a look at, again, select issues, because I think the squeeze is still on here. The big thing is you've got two kind of large forces. One is China not doing so well. And today we'll look at a trade in the chat room for, like, say, the FXI, kind of a standard setup that we use in there. Kind of because it's been sort of gapping and moving, so some sort of long gamma trade in there. So anyway, so China, if it's slowing down, bad for commodities. However, there's a squeeze on the other side, which is pushing commodity prices higher. So what we end up with is that, we're getting this kind of pull in the metals. Right? We're getting more volatility. We're getting a lot more movement. We're getting a lot more of everything. So the market looks like it's going to stay weak until what Draghi says on the 10th. Keep an eye on volatility, because if Europe decides to do something like negative interest rates, again, without really knowing how the market's going to react, I can't think that your negative interest rates in Europe, if the ECB does something like that, is going to be good for consumer confidence. Maybe everybody gets back on board the ECB, but it seems like lately, any extreme easing, like in Japan lately, not much has worked in China lately. I think the market has had enough of it, so we'll see if how they go to the well. But I can't see too much positive coming out of it one way or the other. So they're maybe it's time to let the economy exactly. Well, we're at 2,000 or near 2,000, so I know all this liquidity and there's no inflation. Maybe somebody should take a note of that. They're all looking at the data, right? We keep trying to push this rock up the hill and it keeps rolling down on our feet. So, if anything, I would expect the market actually to move more. Now, apparently Goldman came out with something about buying calls. I would say, I don't know so much about calls. I think you want to buy gamma. I haven't seen anything to change my opinion on wanting to own, like, select name gamma through this cycle right now. It feels like the market is at some sort of, again, either can we break out of the 2,000 range, or do we just go crash? Because everybody figures out the central bankers can't do anything anymore. And I think that's been sort of the knife edge we've been dancing around. So again, keep an eye on VIX. If it keeps going up, stocks are going to keep going down. That is, again, that will not surprise me. Keep an eye on the financials. That's going to give us a tell for interest rates. You've got, really big moves in treasuries. Why? Right? We've got, again, we hit 2,000 the SPX again. Treasuries at, getting close to those really higher numbers. So, I think we're at the point where, we're kind of at the almost anything can happen stage. So be very cognizant of the types of positions that you have on. Right? Another trade we're looking at, gold as well. So again, we're mostly going to look at structuring around this May 10th meeting, see if we can put on trades that are going to cost us a minimum of carry but give us a maximum of move potential. And I think take your picks. Some of the stocks that could be a little more vulnerable to either way, look at some volatility in some of the simpler names. I think even like Apple, we looked at yesterday. The tech names or the volatility has come in a lot. They've made a big rally from the bottom, which could have move potential all over the place. So just that's, I think, the kind of stuff to keep an eye on. Also, the standard crowded trade of the euro. So we'll just look at the FXC. What's that worth if they go to negative interest rates? There's a lot of questions, a lot up in the air, but we're still at the we can go anywhere stage, and I don't think any of that's changed. With that, I will see everybody in our chat room later today.